All right, let's just get right into it. If you've ever talked to a financial advisor or read any investing book, you've heard this same thing a million times. Diversify. It's treated like this unbreakable golden rule of investing. But what if I told you that rule wasn't actually designed to make you rich? What if it was designed to guarantee you stay average? Today, we're going to tear down the great lie of diversification. And look, this idea isn't something we're just making up. This comes straight from Warren Buffett, arguably the greatest investor of all time. His point is just brutally honest. Spreading your money all over the place isn't some genius strategy for winning. It's a defense mechanism for not really knowing what you're doing. And that brings up a huge question, doesn't it? If the most successful investor on the planet sees diversification as a crutch, then why is every single advisor on Wall Street pushing it so hard? Well, the answer has almost nothing to do with protecting you and everything to do with how they make their money. So let's start by really unpacking the myth itself. Before we can see why it's so wrong, we have to get a clear picture of what we've all been told to believe. The advice? It sounds so smart, so responsible, right? Put a little bit in tech, a little in real estate, some bonds, maybe some overseas stocks. It's the classic, don't put all your eggs in one basket line. And it's been repeated so many times that it feels like absolute truth. But here's the catch. If your goal is just to get whatever the market average is, then sure, that advice works fine. But if you want to build real, life-changing wealth, then spreading your money thin across 50 so-so ideas mathematically guarantees you will never get incredible results. It is, by its very definition, a recipe for being average. So, who does this myth really help? Turns out, this advice is the cornerstone of Wall Street's brilliant and incredibly profitable complexity trap. First things first, we have to totally rethink what risk even is. We're taught to believe risk is when a stock price goes up and down. But real risk, true risk, is so much simpler. It's just ignorance. Buying something you don't understand, that's the real gamble, whether it's one stock or 100 of them. Buffett has this perfect metaphor for the financial industry. He calls it a Rube Goldberg machine. One of those absurdly complex contraptions with all the levers and pulleys built to do something really, really simple, like buttering toast. And there's a very good reason for all that complexity. It's because they can't charge you a huge fee if they tell you the actual secret, which is buy a fantastic business and then do absolutely nothing for 20 years. Their whole business model is built on activity, on complexity, on fear, because that's what they can send you a bill for. True wealth, on the other hand, is built on doing almost nothing at all. Okay, so if diversification is a trap, then what's the alternative? Well, it all starts with a really simple but powerful idea: knowing your own circle of competence. I want you to picture a circle. Inside that circle is everything you genuinely get. Maybe it's software, maybe it's retail, maybe it's trucking. You know how those businesses work. You know their weak spots, you know who the winners are. Everything outside that circle, that's a danger zone for you, no matter how smart you think you are. And the rules for this circle are dead simple. It doesn't matter how small your circle is. If you're the world's leading expert on, the soda can industry, you can build a fortune. The only thing that matters, the absolutely critical part, is knowing where the edge of that circle is and never, ever stepping outside it. The second you do, you've stopped investing. You've just become a gambler. So, you've defined your circle. Now comes the hard part, the part that requires almost monk-like patience and discipline. This is the art of waiting for what they call the fat pitch. This whole idea comes from Ted Williams, who might just be the greatest baseball hitter of all time. See, he figured out that if he only swung at pitches that were right in his perfect sweet spot, he'd be a legend. But if he started chasing bad pitches out of the zone, he'd just be another average player. Investing is exactly the same, but with one huge game-changing advantage. See, in baseball, if a perfect pitch comes sailing over the plate and you don't swing, that's strike one. You're penalized. But in the game of investing, there are no called strikes. The market can throw thousands of ideas at you, crazy tech bubbles, cryptomanias, whatever, and you don't have to swing at a single one. You can literally stand there with the bat on your shoulder for years, ignoring all the noise and the hype, just waiting and waiting until that one perfect, beautiful pitch comes floating right into the middle of your circle of competence. And when it does, that's when you swing for the fences. So, how in the world do you force yourself to be that disciplined? Well, Buffett has one last incredibly powerful way to think about this. He calls it the 20-slot punch card. Imagine this. The day you're born, you're given a punch card. And on that card, there are only 20 slots. That's it. 20 punches, 20 investment decisions for your entire life. Just think about how that would radically change your behavior. Would you really waste one of your precious 20 punches on some mediocre company just to be diversified? No way. You'd wait. You'd do massive amounts of research. And when you finally decided to make a punch, you would do it with 100% conviction. And that right there is the entire secret. That is how you build true, lasting wealth. You don't get rich by sprinkling a little bit of money across dozens of pretty good ideas. You get rich by concentrating your money and your brain power on a tiny handful of truly extraordinary ones. Because in the end, building wealth isn't the loud, frantic, chaotic activity Wall Street wants you to think it is. It's quiet. It takes real character to just sit there, doing nothing, while the rest of the world is panicking or chasing the latest trend. It means you have to learn to love the boredom of waiting. So I guess that leaves you with a choice. Are you going to keep playing the game by Wall Street's rules, the ones that guarantee you'll finish right in the middle of the pack? Or are you ready to step away from the crowd, embrace that silence, and patiently wait for your own fat pitch? It's up to you.